Knowledge series in association with Resurgent India ICICI Bank presents a virtual seminar on Letter of Credit, a catalyst for cross-border trade. Moderator Mr. K.K. Gupta, Director Resurgent India Limited. Mr. K.K. Gupta is the Director at Resurgent India Limited, specializing in corporate finance and management consultancy for SMEs as well as large corporations, handling substantial financial transactions. He also serves as a task force member for government MoUs and on the grievance committee at Power Finance Corporation. With a 36-year banking background and tenure as General Manager at Central Bank of India, he holds degrees in economics and bank management. Key speakers: Mr. Gaurang Vaswada, trainer, ex-banker and partner, FEX Fien Associates LLP. Mr. Gaurang Vaswada is an ex-banker with 35 years of experience in international trade, finance, and foreign exchange. He has held various positions during his banking career, including that of Chief Dealer Forex and Head of International Division at erstwhile Bank of Rajasthan and as Branch Head, Compliance Manager and Subject Matter Expert, SME, Trade with ICICI Bank. At present, he is actively involved in training for trade and forex-related subjects in and out of the banks and advising corporates in matters involving FEMA and RBI guidelines. He is also resource person for the Indian Institute of Banking and Finance, IIBF, and faculty for FEDAI. Mr. Bhavin Joshi, SME, Trade Finance ICICI Bank. Working with ICICI Bank in Trade Finance Department and having 15 years of experience and currently holding position as Subject Matter Expert, SME, Trade Finance total experience of 20 years and have done CMA and CAIIB, working with ICICI for last 3 years.
Hello.
You can start, sir.
Sir, please unmute yourself, sir.
You're mute.
Hello, good evening, friends. I am your host, K.K. Gupta here. I am a Director of Research in India and Association for Financial Advisor of India. So today's webinar is very important webinar in respect of letter of credit. What is the benefit of the letter of credit for exporter, for importer also? Because it is a liaison between the two, buyer and seller. And third party, the banker, and any financial institution also involved, will they take a guarantee for the payment if the documents are drawn as per the letter of credit? That means the exporter getting a guarantee that the payment will be made on due dates. And it can be different type of letter of credit. But we are talking about the revocable letter of credit, irrevocable letter of credit, and confirmed letter of credit. And we are also talking about the transferable letter of credit. I think this is the most important aspect which we are going to discuss for a small SME sector who are a middleman, who want to export it, like finding some difficulty. In that case, the transferable letter of credit can be helpful to these people. And we are talking about the standby LC and site LC and nuisance LC. Nuisance LC and site LC are very important aspects. And these LCs, as you told me that it is playing very important role because the payment security is there. And it is reducing the risk. It is mitigating the country risk and the wire risk. That means it can improve your cash flow. If you got a letter of credit, definitely the banker can give you finance at a very cheaper rate and a very expedite manner without even asking for any collateral security. So that can increase creditability once you get a letter of credit. So exporter get a creditability for that because he got a letter of credit and then he want to export something like that. Then they shift from the know that we are talking about the traditional banking. We are talking about the paper-based banking. From that, now it is coming to a digital platform where they enhance the transactions and reducing the costs, even reducing the timeline and reducing the risk factor, fraud, which was happening. For that, ICICI Bank is playing very, very important role for that because they have also started the digital opening of the letter of credit and honoring the letter of credit. And we are with us, the respected Sri Vaswada sir, who is always with us. We completed about 13 webinar under the series of the ICICI Bank, and he is the main trainer for that. Different subject we are talking about. Either we are talking about the assessment of the limit under the packing credit, pre-shipment and post-shipment. What type of documents are required? What are difficulty in which faced by our exporter and also the importer? And what type of guarantee they can issue by the bank, whether it's non-fund-based limit they can also avail, or a fund-based limit also in the shape of the pre-shipment and post-shipment. That we have discussed. Even the ICICI Bank, different person, different official who is handling the affair of the ICICI Bank has given a proper presentation to you. So I'm happy that we are more than 400 stations with us. And under the banner of the Association for Financial Advisor and Research in India, with the ICICI Bank, we've done about 13 webinars under our series. And under the Association for Financial Advisor, who is a knowledge partner with our members, so we have conducted about 55 webinars. And we also conducted under the banner of the Research in India about 240 webinars in a different series of a different subject. So we will now be discussing with you letter of credit. What is letter of credit? And how, what, and why letter of credit is required? And how you can use the LC for financing the transaction. Using transferable LC, which I told you that we are also going to discuss. Most important aspect which we are going to discuss, the application of UCP BC, how it is working for the LC transaction. Who had gone to LC transaction that we are also going to discuss. And we are also going to discuss one case study with you. These are aspects which we want to discuss with you. I think any question from your side, so you are welcome. Any queries, any question, you can ask from our expert. This is Mr. Gaurang sir, who is expert under the field. He is also ex-banker and also partner with the Taxfirm LLP. And he is a trainer for the different subjects. He is expert for the export financing. So I will not take much time. I request Mr. Gaurang sir, please give your thought in respect of letter of credit, subject matter which are you talk to your new friends, my participants. So I hand over to Mr. Gaurang sir to take over the session. Thank you, sir.
Thank you. Thank you, K.K. Gupta sir. Thank you for setting the goal of this seminar. I must thank the Association of Financial Institutes of India, Research in India, and ICICI to bring me here back on this 14th seminar, as sir said. Now, the topic for the today is about letter of credit. And two important things which Mr. Gupta referred to is that One is that when we are doing business, we need to reduce the risk. So we'll see how LC reduces our risk as an exporter and also, or as a supplier, and also how to use letter of credit as a financing tool to take it in our advantage, how to use that particular thing. Besides all, we will cover some of the other aspects of the letter of credit and precautions also. I will just share my presentation and from there we Oh, this is okay. Letter of credit, a catalyst for cross-border trade. So we just start from here. Now, before starting and before going on to what LC is, let us see that what methods of payment are there and why there is a need to have a more safer method of payment, and then we go to the letter of credit. Now, normally when we have a terms of contract, we will have a terms of shipment. Preparing a contract or a discussion on the contract between the buyer and the seller. The first thing that how shipment is going to be made, what mode, how and where the delivery will be done, where the delivery will be done, and what cost and cost sharing will be there between the buyer and the seller. And for that, we use Incoterms. Now, we have decided about the product, we have decided about the shipment, so we also need to decide about the terms of payment. How payment will be made, the mode or method, and what will be the tenor, maybe it is site or usance, etc. Now, within all this, the terms of shipment, that is Incoterms and other items, the product, quality, packaging, etc., and the terms of payment, how and when, etc., the rights and responsibility of both the buyers and sellers need to be put in place. At times, we have seen that the contracts are not complete. They say payment by TT. Now, when it is missing there? It says shipment from Mumbai to Dubai or maybe Jebel Ali port, Nhava Sheva to Jebel Ali. But it does not mention what terms, Incoterms will be used, who is going to pay the freight. So we need to crystallize the terms of payment very clearly and clear cast. Otherwise, we are maybe trying to give some space to some dispute later on with the buyer, or there could be some dispute between the buyer and the seller. Now, taking this terms of payment forward, we may see that when payment is to be made and how the delivery of goods or when the delivery of goods is to be made. Now, these two terms could be interlinked also. How? If we have a payment term which we call site, site means as soon as the bill is presented to the buyer, if it is to be presented to the banking system, then we call it documents against payment or cash on delivery, means you will get the title to get goods of the document when you pay. Site document immediately upon shipment. Now, when you are making the shipment directly to the buyer, this term documents against payment loses its value. It does not have its value. I have consigned the goods directly to the buyer in Dubai and sent the documents directly to the buyer in Dubai. Now, the terms, the site written on the invoice does not have much meaning. Still, I am at all risks and maybe all the what should call the rights have now been given to the buyer, and only if there is a documentary collection bill or a letter of credit, then this site term is more applicable. The other could be usance. Usance period means the seller has agreed to give certain time to the buyer to take the goods, maybe sell, and then make the payment in certain period of time, and that is what we call deferred payment. 90 days, 60 days, could be date of presentation, could be date of acceptance, could be date of shipment. Usage document also, if it is under open account, direct shipment to the buyer, then still I am at the mercy of the buyer only. Maybe he makes payment, he does not make payment. How to firm this? How to crystallize this? We have 4 standard methods of payment which are used internationally: advance payment, open account, bills for collection, and letter of credit. Now, when we have an advance payment, the buyer pays first. When we are dealing with certain specific commodities, who pays first? Either I have a monopoly, my product, or my goods are of high demand, or I am making certain specific chemicals, pharmaceuticals, or components for maybe some high-end equipment, then only I will have a monopoly. If I make, so 99% or maybe 98% of the products in the world may not have a monopoly. When we meet maybe 1,000 people, only 1 or 2 we will be able to find out the exporters who are into some very niche product. Maybe making certain parts for an aircraft, or maybe artillery, all those things. So only in cases where we have very niche products, we can demand advance payment. Otherwise, we have to negotiate advance payment. Shipment is made after the receipt of payment, so the seller is safe. Now, buyer is at risk. The shipment may not be made by the seller. He has received 100% advance. He may not ship at all. He may ship, but not as per the given timeline. The shipment is to be sent in June. He may ship in July or August, somewhere like that only. And the quality is not as agreed. Because he has received advance payment, he has the upper hand now. He is not worried about the subsequent business, name, fame, etc. The brand. Then he may send something else, a lower quality of goods. Advance payment is entirely favorable to the seller. He has an upper hand once he receives the payment. The next is open account. Open account has to have a high degree of trust between the buyer and the seller. In the previous one, only the buyer will have to have a trust on seller. There may not be a trust by the seller on the buyer. But here, it is a two-way. The account is open. Sometimes this side, sometimes this side, but largely, the goods are sold on credit by the seller to the buyer. Generally, the shipment first. The buyer gets the goods before payment, and there is an open term. You sell and send me the money, but within 90 days or 70, maybe 60 days or 180 days. Payment as per arrangement. So arrangement could be the tenor is written as 90 days, but you should send me the goods as and when you are able to sell, maybe in parts also. There is the usance period or after sale of goods. The risk for seller would be no payment at all. The buyer has received the goods and he has vanished. He will come and say, sir, we have sold goods, but the buyer is not traceable now. Or the payment could be delayed. Once the goods are received by the buyer, he could take it for granted, and then at the time when you demand the money after 90 days, then he may raise several disputes or issues. Quality was not good, the shipment was delayed, there were 5 broken boxes or 10% of the goods were broken, the tiles were not fitted properly, the sizes have not been measured properly, there were certain loose buttons in the garment, etc. Anything. But when you demand the money. So it is favorable to the buyer and mostly against the seller. Now to reduce this direct dealing between the buyer and the seller, we thought of bringing a bank in between, some third party. They may not guarantee. There is no guarantee in bills for collection by the bank. But still, there is an institution which is coming in between, which will take care of certain documentation, etc. How do they do it? Documents are sent by seller's bank to the buyer's bank. So in the contract itself, they have said that okay, we will send the documents through your bank only. So may ICICI Bank in India sending documents to Mashreq Bank Dubai or presenting to ABC Dubai. When the terms of payment are signed, the buyer's bank is instructed to release the documents against payment only. So I have not sent the document directly, but kept the documents with the bank abroad, who is an agent of ICICI Bank, ICICI Bank becoming an agent of the exporter, to release the documents only when the buyer makes payment. So I have a control on the document if the buyer does not pay. The other alternative, there are usage documents. So when it is a usage bill, the bank will release the documents only against acceptance of bill of exchange. So it is at least I have a bill of exchange duly signed by the buyer, accepted for payment on due date, value said $50,000, which is kept with Emirates Bank, which is kept with Mashreq Bank Dubai, and which can be used in a court of law as if so required or if not required. But still, this transaction is not free from risk. Business is risk, so it is not free from risk. I have made the shipment, send documents to the banking system, maybe even site, and the buyer does not come forward to take the documents. He says, I don't want the goods. You give me 20% discount, or you take back the goods. Non-payment after shipment. He does not come forward to take the documents at all. And in case of usance, since there is no guarantee by the bank is going to make payment or only when they are able to collect from the buyer. So on due date or after due date, the buyer does not provide the funds or does not instruct the bank to remit. So non-payment even after acceptance. I only have a piece of paper. I'll have to go in for litigation now. We may then raise quality issues. Since the payment is not guaranteed by the bank, still we are facing certain risks here. While this balances the risk for advance payment and open account, still it is not risk-free. So what do I do now? I have to find a product where buyer and seller both risks are covered, and hence we got another tool. So what are the concerns here for buyer and seller in advance payment, open account, and documents? The concern for the seller is that the buyer may not make payment. The concern for the buyer is that the submission of documents is not there, compliance of condition is not there. If I pay advance payment, then he may not ship the goods. He may not ship the goods of quality, etc. So both the concerns are there, which takes us to another mode of transport payment, which is letter of. Now, how do we decide on mode of payment? It has to be mutual agreement. Somebody says, sir, I am demanding LC, but the buyer is not accepting. It has to be mutual agreement. Or I have to decide that I will not do business. We find several exporters who say, sir, we are in the business for last 15 years, not a single shipment without LC. Same buyer for last 15 years, but still LC is used by both the parties. Maybe both are benefited out of it. It is not that only I as an exporter will benefit. Both are benefited. So it has to be a mutual agreement. It takes care of risk for both the parties. The method of payment to be decided should take care of risk for both the parties. Now we have seen what risks are there in open account, what risk is there in advance payment, what risk is there in bills for collection. It will also depend upon the nature of commodity, whether I can demand or whether the buyer also wants to issue an LC to safeguard certain of his aspects. Maybe pharma, airplanes, made to order goods or generic goods, etc. What is the type of market, whether buyer's market or seller's market? If it is a seller's market, the exporter will be able to demand. If it is a buyer's market, maybe the exporter may not be able to demand or may not be insist upon to get an LC or any other document. Whatever be the method of payment, even if it is an LC, I must ensure to have a proper due diligence on the buyer as an exporter. The word due diligence is normally used by the financial sector. But why not the businesses? Do not jump upon the first order which you receive from any XYZ in Dubai or any XYZ in Malaysia or an African country. People even don't look at the country risk. Don't jump upon. The proper due diligence on the buyer is a must. And in my personal view, even if you are getting 100% advance payment, you could be entering into a fraudulent area. We have seen 2 advance payments, then 2 collection bills, then 1 LC, and then open account, huge number of bills and never paid. Banks have burned their fingers, exporters have burned their fingers. So we move to letter of credit, which is a safer instrument, it seems. Because when we reach towards the end, I will also tell you, or we will cover somewhere, that this is the safer instruments, but it has to be handled with care. Very importantly. What is an LC? It is an arrangement whereby an issuing bank guarantees to pay a third party. The first line or the definition does not have a mention of the buyer. It says issuing bank. Issuing bank is what? Buyer's bank. So buyer is not on the picture at all. Buyer is arranging through his bank to issue a bank guarantee sort to pay to a third party. It is an exporter, beneficiary, by a given date as per agreed terms and conditions against presentation of credit compliant documents. If the terms and conditions in that letter of credit is compliant, agreed to terms and conditions, all dates, values, amounts, documents, etc., signatures, etc., then the bank says we will pay. In this definition, the buyer is not there. Buyer is out. Now, with this, if all the documents are presented, they are safeguarding the interest of the buyer. Because buyer will list out all the documents which will safeguard all his interests. We will see all documents are there. And if as an exporter, I am able to support or supply the documents or provide the documents which are listed in the LC, then I am sure that this bank is going to honor it. And beautifully, this is irrevocable. Once issued, cannot be withdrawn. In between, classic case of LC being issued, the guy started manufacturing products. After 15 days, he got a notice. We have withdrawn this LC. Now, what to do with the product, half manufactured, full manufactured, etc. It is irrevocable. You cannot withdraw it unless until the beneficiary surrenders it. That I am not going to use it, I am not going to do the shipment under this LC. This balances the risk for buyer and the seller because there is an involvement of a third party, that is a bank, and supported by the documents which are listed in there. Now there's the word credit in letter of credit. Whose credit is this? Buyer's credit? No. Credit is issued by the bank, so bank's credit. What is credit? Credit is SAK. I have to only rely on the credit of the bank. So even if my due diligence on the buyer is slightly weak, but the LC is issued by, say, ICICI UK or ICICI Hong Kong, then I know that the credit of the bank, which is named as an LC opening bank or issuing bank, is enough to provide the company. Credit of a bank. So now from this we derive that I must now see that the bank is trustworthy, bank is known, bank is first class. Buyer's bank guarantees payment to the seller upon submission of required documents and compliance of terms and conditions. Buyer is assured of shipment, timely shipment, quality and related documents, and seller is assured to get the payment upon submission of documents which are credit complete. This reduces the risk for seller and the buyer. I have used the word reduced. I have not used the word eliminated. We'll see how. So it is based on documents which are required under the LC. Terms and conditions which are stipulated. Documents as stipulated under the LC and complying to terms and conditions. What terms and conditions? How the risks of buyer and seller are addressed. The seller's fear is that he will not get the payment. Now the payment is guaranteed by the bank. You submit the documents, you comply the terms and conditions. So the LC will ask for shipment date by 30th June, shipment of 1,000 pieces of gents shirts, white office shirts. You provide the documents stating that 1,000 shirts are there in those 100 cartoons, anything, whatever terms and conditions. Payment is guaranteed by, if you are providing the documents, your payment has to be made by the bank. The buyer says, if I make the payment first, the supplier may not, the exporter may not ship the goods. So all other fears will be taken care of by asking for documents in the LC. Immediately the LC documents are asked for or called for by the buyer. He will list out, I want all these documents, and then only bank will issue that LC with those documents requirement. So submission of documents is prescribed by the buyer in the LC accordingly. And non-compliance of conditions. So whatever conditions are there, that they all are stipulated in the LC. So buyer says, my bank will pay only if my conditions are complied by the exporter, so I am safe. If the shipment is not made, my bank is not paid. If the quality is not maintained, my bank is not paid, so he is safe. So what are the conditions? Shipment made or not made, I will say full set of clean on board bill of lading, full set of original. The shipping documents are prescribed. Timely shipment, I will say last date of shipment 30th June. If you make 2 shipments in July, August, the bank is not going to pay. Quality related aspects. Buyer will specify requirement of inspection certificates, either by the manufacturer or by the independent agency, SGS, or own nominated inspection agency, or his own buying agent. Maybe we see in the garment industry, own buying agent is authorized to do the inspection. And several other terms and conditions, signature, certificate of origin, preferential certificate of origin, etc. What export letter of credit will mean? Letter of credit is established by a foreign buyer through his banker in favor of the Indian exporter. The LC is issued by buyer's bank and it is advised through a bank in India. Now, I do not know Emirates Bank, I do not know Mashreq Bank Dubai. If I get an LC, how do I know it? So the foreign bank will get this LC verified through a bank in India, authenticated, which we call as an advising bank. If there is a weak bank there, some third world country, maybe some African country where I do not know the name of the bank also, there, if the LC is opened from that bank, I can always insist, please get it confirmed by a bank in India which I know, reinforcing the guarantee by a bank in India. So maybe Standard Bank of Africa or Kenya issues an LC which is not similar to Standard Chartered Bank. But Standard Bank may have an arrangement with State Bank of India. Then I will say, sir, this is not Standard Chartered Bank, so you get an LC confirmed here in India. So Standard Bank Kenya's LC can be confirmed by State Bank of India if they have an arrangement with credit line person. Document can be handled by Exporters Bank or any other nominated bank. So suppose LC is confirmed by the bank, then State Bank will say you submit the documents to us automatically. Who are the parties? Applicant, the buyer. The buyer's bank is the opening bank. The bank which authenticates in India is advising bank. In our example, State Bank becomes the confirming bank. The beneficiary is the seller or the exporter. A nominated bank or negotiating bank could be mentioned in the LC to support the transaction. And if the money is to be taken from a bank, say in USA, Chase Manhattan Bank, then the bank from whom I have to claim the amount or my bank has to claim the amount becomes the reimbursing. Various types of LCs are there. Site LCs, where the bank has to make the payment immediately upon receipt of credit compliant document. Now, at one of the places, the rules governing the LC says bank will get 5 banking days to examine the documents. So in a site LC, even if 5 banking days are taken by the bank to examine the documents, then 6th day is the date when the payment becomes due. You cannot delay more than that. 5 days, you keep the documents with you, examine the document, try to find out faults, deficiencies. But not beyond that. 6th day becomes if you fail to communicate in 5 days, then you have to make the payment on the 6th day. Usance credit or deferred payment credit, where it says payment will be made 90 days from the date of shipment. If the documents are not discrepant, 90th day from the date of shipment becomes the due date. The bank has to pay on that day only. Acceptance credit is that I will convey that the documents have been accepted by us and then we will decide on the due date. So maybe the due date will be marked as 90 days from the date of acceptance or 90 days from the date of receipt at our counters, etc. But acceptance is a must there. The right to fix the payment date now is with the bank which is opening the LC. Transferable LC, where the first beneficiary in whose name the LC has been received does not do the shipment. Somebody else does the shipment. So we'll see in the end what exactly transferable credit is. Revolving credit or installment credit, we can also have another version where many shipments are to be done under a contract. Say maybe 2 shipments every month for $50,000 for 1 year. But there is no need to open a LC for $12 lakh. You open an LC for $1 lakh. As and when one shipment is made, the LC value goes down, then it is reinstated. Again, the LC value goes down, then it is reinstated. So it revolves 1 lakh to 50,000, 50,000 to 1 lakh, then again 1 lakh to 50,000. It will revolve for the entire year because there is a chain of shipments to be done every 15 days, first fortnight, second fortnight. Now, 2 more LCs are there, which we call red clause and green clause, where the buyer is facilitating some payment at the pre-shipment stage itself to the exporter through the bank in India. Either it is a clean advance or it is an advance under some undertaking. allowing finance to the buyer, allowing finance to the exporter before shipment, maybe to procure raw materials. Instead of making certain advance payment, normally what we have, 20% advance, 80% LC. But here what they will say, 100% LC, 20% under red cloth or green cloth. And there is one more back-to-back credit. Now, back-to-back credit is in fact a separate credit per se. I receive an export LC. I have to procure raw material. I have to open another LC in favor of the buyer in India without transferring the LC. So buyer will open, now the Indian exporter becomes a buyer and he will open a LC in favor of the domestic supplier, back to back. But they are still two separate transactions. I need credit limits for back to back also. Two important things for an LC transaction. Firstly, we saw that word credit, and the credit is of LC opening bank. So I must ensure that it is a first-class bank or with a good rating. Good world rating, good country rating. Maybe Google it out. Or there is a publication, Bankers Almanac, which your bank will have. You can always go and ask your bank whether this bank is good enough to do the transaction or not. First-class bank or a bank with good rating, country rating and world ranking. And then submission of documents. If as an exporter, I am unable to comply to the terms and conditions and submission of documents which are required verbatim, we normally say if there is an error in spelling, the documents with error in spelling are required to be. And the good example of that is the name of the firm was R-A-M-A, Rama. And what we call Ram and Company. When you say RAM and Company, the other guy has opened an LC in the name of RAM and Company. I need to have a separate letterhead now, RAM and Company. Or get an LC amended because Ram and Rama otherwise are same, but they are different for LC. Some spelling mistake is there. How does an LC chart flow? This is the buyer. This is the exporter. The first document to see is the agreement between the buyer and the seller. With this agreement, which says that the transaction will be done under an LC, the buyer goes to his bank and makes an arrangement, maybe sets up the limit or provides the margin, etc., and requests for issuance of LC. So the buyer will give an application of LC to his banker, which becomes the issuing bank now. Issuing bank will transmit this LC through a correspondent bank, which we call advising bank. And this advising bank will then advise this LC to the exporter. What is the role of advising bank? He will only authenticate that this LC has been issued by Mashreq Bank, Dubai. Not for the contents, not for the rights, not for the genuinity. Only that this is an authenticated message received from Mashreq Bank, Dubai in a standard format, MT700. Now, the exporter will have a look at that, whether it is in line or in tune with the agreement of all the terms and conditions, etc. Then he will make the shipment, prepare the set of documents, and then this set of documents is transmitted through his banker to the LC issuing bank. Now, without referring anything to the buyer, LC issuing bank is required to examine the documents and see whether they are discrepant or fully compliant. And if they are fully compliant, they are supposed to make the payment. See this black arrow. To the bank from whom the documents have been received. It is a side document, make payment immediately. If it is a usage document, confirm that the documents are acceptable and we will make payment on 15th of August, 14th of August or 15th of August, whatever be the date, 90 days. If it is a site LC and the issuing bank will then take the payment from the buyer and then hand over the documents, the buyer can go to the port and take the document. If it is a usance document, then against a guarantee, against an undertaking, against acceptance of draft, the issuing bank will release the document to the buyer and the buyer can take the possession of the goods. But on due date, whether the buyer makes the payment or not, the payment is required to be made by the issuing bank to the bank of the export. Whether the buyer makes the payment on due date or not, irrespective of that, the payment is to be made because there is a guarantee of the bank. What bank? We named first class bank. You cannot go back on your guarantee. Now, if this first class bank is somewhere where I am not comfortable, I have never heard the name, or there are certain cooperative banks in maybe certain parts of the world like Netherlands or maybe Germany or somewhere like that, and even in India also. If I get a LC issued by some ABC cooperative, or maybe there are NTSA banks in US, which are National Saving Trusts, NTSA, Trust Association. We do not know what standing they have. So I will ask, either you get me an LC from a good bank, or you get this LC confirmed by a good bank here in India. Maybe ICICI, HDFC, Axis, or State Bank, Bank of Baroda, PNB. Any bank. Once this confirmation is added to an LC, then this bank in India is firstly liable to take the documents. Instead of sending these documents here, now my bank will send the documents to State Bank of India or ICICI, whichever is confirmed the document. And they are required to examine and confirm or make the payment to me. They have a back-to-back arrangement with this bank. But for us, they are everything. An adding of confirmation to an LC where I am not sure about the standing of the LC issuing bank abroad. How do I use this as a financing tool? The buyer or importer will always want a deferred payment arrangement, usance period, 90 days, 180 days, 270 days, whatever is the period. And the seller will always want immediate payment, either advance payment or side payment, or because his cash flow he wants to use it. When there is a letter of credit by the or a guarantee by the bank, then if I am able to have a 90 days LC also, buyer bank, when there is a 90 days LC, we saw in the previous chart that the buyer is paying to the bank on 90 days only. If the documents are credit compliant and have been accepted by the issuing bank, then my bank in India or any other bank will be agreeable to negotiate or discount the documents upfront. We will go back to the chart again. And normally the negotiation is done once a confirmation is received, either from a issuing bank or a confirming bank, about the due date of the payment, acceptance. So let us go back to the chart. Now, if this is a 90 days LC, the buyer is paying to issuing bank on 90 days. And the issuing bank is supposed to pay to this bank here in 90 days. But how do I raise the money? So now, since there is a guarantee of this bank here, this bank of the seller may negotiate the documents and pay to the exporter upfront. Maybe it will take 5-7 days to get the acceptance total, sending of the documents and getting the acceptance, etc. 5 days, 6 days, 7 days. But after 7 days, this document can be negotiated, which will release the cash flow for the exporter for the remaining 83 days. So it becomes a tool to finance on the both sides. The buyer gets 90 days period, the seller gets the payment in 83 days. Sorry, in 7 days. He is not required to wait for 90 days. What importantly I should look at when I am as an exporter, if I am doing a transaction under LC. Know your buyer customer. First thing, even if there is an LC, I should not lose sight on the standing of my exporter. You all require due diligence, get a credit report also. People say, sir, LC aaya, credit report kyun chahiye? No, still, I personally feel it should be asked for. Know your LC opening bank, first class, acceptable. Go to your bank, tell them, sir, that my buyer says LC will be opened by ABC Bank in Dubai or XYZ Bank in Kenya, whether this is a good bank or not, whether you will negotiate the documents or not, that everything will be known to you. Check the conditions in the pro forma invoice in the contract. They are not one-sided. And once you receive an LC, when you decide to do the transaction, ask for a draft LC. Draft LC means LC is whatever the draft is there, on that the LC will be issued. And then you can at that time tell them that this condition is not as per the contract or as agreed. You can get it corrected. Now we have also seen that the draft LC was one document, and when the actual LC was opened, one condition was still changed. So when you receive an LC, you should again go back to the draft LC, go back to the pro forma or the contract and see that all the conditions are okay or not. Check acceptability of the LC issuing bank by your bank, whether it is acceptable by your bank or not. And then check prescribed documents can be prepared or arranged. Now, when an LC received, it says inspection by SGS Dubai. Now, export from India, how do you do SGS Dubai? So you have to get it amended at that time itself. Now, if this LC is required to be confirmed by a bank in India, then you must see that who is going to pay the charges. Whether the exporter is required to pay or the bank should pay or that other party should pay. Check reimbursement clause. How the money is going to be transferred. One says reimbursement can be claimed by the negotiating bank from our reimbursing bank in Neon. Another says we will pay on due date. The third one says we will pay on receipt of funds from the buyer. We have to examine the risk and we have to understand that risk. Check last date of shipment and last date of negotiation, whether it is as per agreed terms and whether you'll be able to do the shipment by that time or not. Sometimes you decide with the buyer that shipment will be made by 31st of July, but he wants earlier delivery, so he will put 15th of July. Check any other dates, installment shipments, inspection prior to shipment, etc. to see that how you are comfortable in getting or complying to those conditions. Now, have checklists prepared in-house in your own system based on all the terms and conditions. Have your checklist tick, 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 whether you are going to comply it and whether complied or not. Now, lastly, great learning for me also. Take out 5 printouts of that LC and give it to all different stakeholders within your organization. Your factory or production unit, your accounts department, your export section, somebody who goes to the bank, accounts and banking also, and finance also. And ask them to check the conditions, whether anything they want to amend or not, and they will be able to do the shipment, do the production, prepare the documents as per the timelines and the conditions given in the LC or not. If there is something, come back in 24 hours so that we may ask the buyer to do the amendment. A garment manufacturer got an LC for supply of some printed skirts, printed crinkled skirts. Now, as the date approached, the production unit informed that the particular print is not as of now available with us readily. Just 10 days or 5 days before the last date of shipment. You'll have to see whether what is the position of the raw material, availability, labor. You have aritari work. You have other crinkling work. You have check work, all those things. You have to see whether it is possible to do. If it is not possible to do, raise an alarm now. We also have governing rules for LC. LC, otherwise, what is it? It is a part of that contract, and contract is always governed under the Contract Act of the respective law which is applicable, my country or your country. But for transactions for the LC, there are still another additional governing rules which is not a law. This is in addition to the law. International Chamber of Commerce has prescribed uniform customs and practice for documentary credit, which we call UCPDC, which is a standardized set of rules on issuance and use of LC, aimed to benefit all parties during the trade finance transaction. It is acceptable in almost 200 countries now, with major value of $1 trillion per year being used or financed through this. There are 39 articles, some of them we will see. LC must state that this LC is subject to UCP 600. If it is not mentioned, then you do not get shelter under these rules. There is an interpretation clause which says if there is a term on or about used, then you get 5 days before and 5 days after the date. Say maybe 6th of May, shipment to be done on or about 6th of May. Means you can do shipment between 1st of May to 11th of May. 5 days here, 5 days there. If there is a word shipment to be done before 15th of May, then the shipment should be done by 14th. If there is a term which says after 15th of May, you cannot do shipment on 15th, but you have to do from 16th onwards. Those interpretation clauses are there. The credit is a separate document and undertaking given by the bank, whereas a contract is contract between the buyer and the seller. So everything in the contract does not come on its own in the LC, but you will have to mention it. Let us see these amendments. If my LC is advised by ICICI Bank, the amendment should also be advised by the ICICI Bank. The amendment cannot be advised to State Bank, HDFC, etc. If there is an amendment which has got 3 clauses, or say 2 clauses, one is that increase in value and reduction in unit price. That single amendment has to be accepted in full. I cannot split the acceptance and non-acceptance. So I accept the increase in value, but I do not accept the decrease in unit price. Acceptance of an amendment could be automatic or could be by given something in writing. Normally in practice, there is no written communication of acceptance of an amendment. But suppose the original LC is $1 lakh and there is an amendment which says amount or value increase from 1 lakh to 1,50,000. If I make the shipment of 1,10,000 or 1,40,000, it is deemed that I have accepted. So if I have accepted that amendment which is increasing the value, then any other amendments or any other clauses in that particular amendment are automatically applicable on me. As I said, 5 banking days each bank gets to examine. So in case of site, the 6th day is to make the payment. Ideally, the presentation of document is required to be done 21 days from the date of shipment. We have an example later. Documents other than invoice, transport and insurance can be issued by anyone if not specified. Invoice is to be issued by the beneficiary only. Transport document by the transport company, bill of lading, maybe airline company, shipping line, ship agents of shipping line, etc. And insurance only by insurance company or underwriters. But any other document, say inspection document, it says inspection certificate, but does not mention who will do, anybody who is authorized to do. Now, any condition which does not specify document is to be disregarded. So there was an LC which says goods should be inspected before shipment, but it did not call for inspection certificate. So this is to be disregarded. So the beneficiary or the exporter only mentioned in the invoice goods inspected before shipment or in the packing list.
नूर खान एयरबेस पर हम
Somebody's mic is open, please.
छिपे रहे।
Can you please check, sir? Somebody's mic is open. Original
Yes, sir.
documents and copies. Now, all documents, at least one original should be submitted. So, if the requirement is invoice in 4 copies or invoice in quadruplicate, at least one original has to be provided, or all originals can be accepted. So, one original plus 3 photocopies or 3 copies, or all 4 originals can be. Now, commercial invoice is the main document to this transaction. So, it should be issued by the beneficiary on the applicant. And the description of the goods should be as detailed as in LC, exactly in the same format. Only the commercial invoice is the document where the description of goods should exactly match with the LC. There are multiple types of transport documents. Even if the goods are going by sea, there could be a multimodal or a combined document, transport document, bill of lading normal, seaway bill, charter party bill. There could be goods going by air, so airway bill, railroad. Each will have its own requirement. You should, whenever you are preparing a document, you should see that it is genuinely issued. All correct details are filled, and whatever required is there is matching with what LC calls for. Insurance is required for 110% of the insurance value, invoice value. It should be in the currency of invoice and coverage of risk. The expiry of LC is ideally 21 days from the date of shipment. If the shipment is made on 1st of June, then the LC, the documents are required to be submitted on 21st of June. Tolerance. If the words about or approx are written along with amount or quantity, then 10% plus or minus are to be given. So maybe it is 1 lakh tons approximately, then 90,000, 1 lakh 10,000, $1 lakh approximately, or about $1 lakh, then 90,000 to 1 lakh. Now, quantity can be 5% plus or minus, but not breaching the value of the LC, because in certain commodities, maybe agri commodities which shrink or which reduce the weightage, weight, etc., then the quantity can be plus or minus 5% only, but the value of drawing should be within the LC. And the last is transferable LC. Transferable LC can be transferred by the first beneficiary in whose name the LC has been received to the second beneficiary, can reduce the total value of the unit price, can prepone the date of shipment and negotiation, and can increase the insurance percentage. So we will see how this works. A merchant exporter receives LC for say $1 lakh, but he does not do any shipment. So he does not manufacture the good. So he gets in touch with B, who is a manufacturer, and says, this shirt of $10, I want you to give me at $9. B agrees, and A gets this LC transferred in favor of B, reducing the total value from $1 lakh to $90,000 and unit price from $10 to $9. B has now an LC which is transferred by A or A's banker virtually for a value of 90,000, while A had received the LC for $1 lakh. Last date of shipment given in the original LC, A's LC, was 31st of July. To tighten or to have a room to adjust, the LC which is transferred by A to B has a last date of shipment 15th of July. 15 days preponed. So 15th, 31st July and 15th August, the date has been made as 15th July and 30th July, 31st of July. And the LC requires for 110% of value. What? 110% of $1 lakh. I need $1,10,000 of insurance. Now, if B is going to do the insurance, I need to increase this percentage. So I will say now, else insurance required for 123%. 123% of 90,000 becomes 1,10,000. I can adjust this. B will make the shipment to the original buyer in Dubai for that $1 lakh worth of goods, 10,000 pieces of shirts, and raise an invoice for $90,000 under that LC and give it to the bank which has transferred that LC. $90,000 original shipping documents, goods going from Noida to Dubai, 90,000 shirts, LC, all other conditions are same. Invoice issued is $90,000. $9 per. The nominated bank or the advising bank here in India will then inform A. We have received the documents under this LC. A will go to the bank, pull that $90,000 invoice and put his own invoice for $1 lakh. Substitute the invoice. Rest all documents will remain same. All other documents does not have the value. Only this invoice is changed, and if bill of exchange is required, that is also required. When the bank presents the documents to the issuing bank and gets $1 lakh, this bank is now required to split this payment 90% to B and 10% to A. What I am able to do? Without money, I am able to do a transaction and earn 10% of the margin because I know the buyer, I know the supplier. Supplier does not have an order. I have an order, but I do not supply or I do not have it. Using transferable LC to fund your requirement. Let us have spent 10 minutes on common issues. LC is not subject to UCB. It was not mentioned that it is subject to UCB, so you will not get a shelter. Reimbursement clause says will pay upon receipt of funds from the applicant. Applicant is not a party of the LC, so please do not accept such a condition. Upon acceptance by the applicant, we will pay on due date. Now, this LC is issued by an issuing bank. The documents are required to be accepted by the bank and not the applicant. LC calls for invoice in quadruplicate, 4 copies provided. 1 original should have been provided, or 4 originals. LC calls for inspection certificate not specified by whom. Inspection certificate signed by beneficiary provided. That is valid. This was given as a rejection, but it is a valid point. LC issued by bank in Cyprus for an applicant in Bangladesh. You have to think. Why an applicant in Bangladesh is getting LC issued from a bank in Cyprus? Something fishy is there. Take care. We have got public sector banks and some other banks who have burned fingers in such a transaction. LC advised by local bank, which is not authenticated. When you get a LC from a bank, on the covering letter, they must mention that this is a verified LC. If there is a stamp which says not verified, you have to go back to the bank and ask that if it is not verified, we will not accept it. Go back to the buyer. LC states documents to be presented within 21 days from the date of shipment. Last date of shipment was 1st September and last date of presentation was 15/9. If the shipment is made on 30th August, documents presented within 21 days. Within 21 days on 17/9 got delayed. 21 days is there, but your LC expiry is 15/9. You have to produce within 15/9 only. LC available at bank and place. LC available at issuing bank or confirming bank's counter. One LC was issued at LC available at our counters in Dubai. Last date of presentation is 15th September. On 15th, the beneficiary went to the bank in India. By any case, you cannot reach those documents on 15th of September to Dubai. So if there is such a clause, you have to work backwards and keep at least 5 days gap. If the documents expiry date and presentation place is outside the country, then you have to at least reduce 5 days and then calculate it. LC, confirmation of LC, who bears the cost of confirmation? LC says LC may be confirmed at the request of the beneficiary at their cost. I have to make a request to the bank and then I have to bear the cost also. So the other party has accepted the confirmation request, but he has loaded the cost on you. It could be 1%, 1.5%, or 2% also. LC issued, this is we have done. So this is all from my side. These are my details. If post the seminar, if anybody has any issues, you can also connect with me. Send me a WhatsApp or a mail on this details given. Important things. Learning leads to better business. Maybe peace of mind, good business, and happy exporting. Thank you very much. Thank you.
Thank you, Gaurav sir. I think you have excellently covered what precaution we have to take under the letter of credit. Because you have to submit all the documents strictly as per the letter of credit. So once a letter of credit was opened by the bank or confirming bank informed you, your advising bank informed you, you please see the terms and conditions of the LC. Because LC has to be submitted all document as per the term of the LC. I think you have rightly covered all the precautions to be taken. And you also covered very uniform custom practice and documented credit. I think this is also most important aspect. And above all, you covered the common issues. What are the common issues being faced by the exporter? I think one or two questions will be there. So that we will ask you later on. Now I am requesting Shri Joshi sir, who is the SME head of the ICICI Bank. ICICI Bank is playing a very important role for export. So I request Mr. Joshi to give his thoughts
Thank you, Gupta.
about the digital LC, how you are opening it and how you are honoring it, and what is the benefit for that, or other topics, how the ICICI Bank can help our this exporter. So I hand over to Mr. Joshi. Please give your thoughts, sir.
Thank you, Gupta sir, for giving me this opportunity. Good evening, all. I am Bhavin Joshi from ICICI Bank. And as you know, we have been highly instrumental in banking services provided to the MSME segment and helping them for improvising on providing various trade finance products as well as providing them digital solutions on trade finance products. Our flagship product called Trade Online. Next slide, please. So we have witnessed many customers have been facing challenges with respect to submission of documents. They do not know which branch to be submitted. They are highly concerned about the high transaction charges, whereby we have taken care about this particular fact, and we have developed a product which helps the customer to submit all the documents on Trade Online. We also provide advisory services to the customer so that they can follow all the RBI guidelines as well as SEMA regulations. Next slide, please. So as informed, our flagship product Trade Online has been developed in such a manner that all the relevant solutions pertaining to international trade, consisting both of import and export, are incorporated in this software, in this program, whereby customer is not only able to have his inward remittances settled in an hour's time, but can also execute his outward remittances within 5 hours time frame. We have the capacity of having BGs issued as to the customers if the limits are being set up, or even if it's an FD back within a 3 hours time frame to be delivered. We also have facility of providing electronic BGs with the help of 28 beneficiaries who have accepted this EBGs, which are digitally stamped and signed. We have developed an InstaBiz software or InstaBiz app, which helps the customers to avail instant disbursement of EPCs up to rupees 250 crores. This paperless BGs has been largely accepted by the industry and have been helpful for having various contractual jobs by the by the contractors in the industry. We also have One Globe Trade account, which helps the customers for preferential pricing, as well as it allows the customer to choose its own account number. There is a dedicated relationship manager which can help the customer to fulfill all his trade finance needs. We also extend capital account services to the customer, which helps them to have a pre-verification of FDI filing conducted, and it guides the customer for having all his filings done through online portal. We have developed an FX Online program which helps the customer to book Forex rates online and have his transactions executed seamlessly. Next slide, please. Due to this facility, due to this platform, the customers are able to transact or do the banking round the clock. They are able to settle their inward remittances on timely basis, have their export bills regularized on regularized at regular intervals. They are able to have disbursements availed for EPCs and PCFCs. The collection bills lodgement activity is also executed during the office hours. The bank guarantees request or applications can be made after office hours as well, which can delivered in the next day on the next day. It also helps the customers to have all their regulatory pendencies checked through our dashboard. It enables the customer to have import payments scheduled on a particular due date and have his payment done seamlessly. Our platform also helps the customer to issue letter of credits on timely basis with all the limits being set up in place in the system. It also helps the customer to execute service payments. Due to this, there's a quick turnaround time delivered by the bank. There's a paperless transaction which takes no setup cost, and the services are available round the clock. The customers can also find audit trail of their documents to have the verifications done, conducted at their end. Next slide, please. The benefit of this particular platform helps the customer to avail the pre-filled templates being provided or created, which helps the repetitive transactions to be executed quickly and seamlessly. It also helps to have scheduled payment on the due dates for collection bills. It helps the customer for regularization of bills on timely basis within the government guidelines, which helps the customer to regularize the EPMS and IDPMS entries. We provide a single view dashboard which helps the customer to know all the transactions which are being provided at the bank's end, which are being executed at the bank's end, and it also informs any discrepancies or any kind of deviations or paper documents required from the customer's end on through this dashboard. We provide customized alerts to the customer for keeping them posted with the developments on the transaction execution. We have come up with a platform where the customer is also guided to virtual guidance while executing this particular transaction on this platform, and provided a master vault where it can save their one-time documents such as IC certificates, RCMCs, their status holder certificate, etc. It helps them to have online deal booking whereby the FX rate which are being booked that can be captured for in the trade online and have the transactions executed seamlessly. It also enables the customer to have instant EFC conversion through this portal. Next slide, please. Along with the flagship product of Trade Online, we have also services of having EFC account being opened, SFC account being opened, and Diamond Dollar accounts. These accounts help the customers to park their foreign currencies in its intrinsic form, wherein for EFC account, we have a capacity of having EFC account open for around 24 odd currencies. For SFC account, we have around 18 odd currencies in which they can have their foreign currencies deposited. For Diamond Dollar account, it can be in USD currency only, which is useful for diamonders who trade locally and have the billings in dollars. These accounts have been largely used by the exporters for having their foreign currency risk hedged through EFC account and SFC account and DDA account. Next slide, please. Recently, we have come up with the InstaBiz app, which helps the customer to have the various banking transactions routed through InstaBiz. While it's very much helpful for proprietary and partnership business, they can have their banking transactions routed through InstaBiz. This facility also has one more feature of disbursing EPCs to the extent of rupees 250 crores through InstaBiz, where the orders have to be submitted within 30 days time frame to the bank. And we also extend running account facility for the customers to avail this InstaBiz EPC facility. This can be useful for all the proprietary firms to have instant finance for their export orders. Next slide, please. Recently, we have incorporated a platform which helps the startups or the new business entities who intend to start export-import business. They can have all the links, all the information provided through for availing the import-export code, the trade licenses, the RCMCs, GST registrations, etc. We have dedicated vendors who can guide those startups and the entities who want to start export-import business. They help them to have all these registrations executed seamlessly. We also provide the list of verified buyers and sellers, which help the customers to have not only their suppliers identified for the production or for trading purposes, but it also helps the customers to identify their customers and customers to whom the products can be marketed. These are the verified buyers which have been provided by as a value-added services by the vendors listed on this platform. We also provide information about logistic partners who help the customers to have end-to-end supply chain management for their goods through this platform. There is additional information about the insurance company who help the customer to have all the general insurance requirements fulfilled. Along with it, we provide a separate portal or separate data with respect to various government policies, notifications, circulars being updated on timely basis, various guidelines being shared by ICC and other institutions across the globe. Yeah, so that's it from my side. Thank you all for the patient hearing. It was a pleasure talking to you and informing you about our products. That's it. Thank you.
Thank you, Mr. Joshi. I think you have covered very nicely of the ICICI Bank, what type of facility you are giving. Most important aspect which I understand for a startup. For a startup, you are helping them. You can say as an advisory service. What type of facility you are providing to a startup, including how to import, how to export, and what is the formality has to be taken even to buyer or insurance cover to be taken. I think this is a very logistic. I think you are covered. I think I request to all my entrepreneurs who are listening to us or our member of the association, please avail the services of the ICICI Bank. Even the startup who are facing a major problem for export, they can take the help of the ICICI Bank. I think which can be very useful. Now, lastly, we have some questions. So I request Gaurang sir, please give your thought on the question. I think
so there are questions in Q&A, sir. I'll take from there.
Yes,
one of the questions is asked about what is the due diligence of buyer in LC establishment and who does this, bank or the seller? And what are the parameters to be seen for the buyer? Now, the first and foremost, the way when we go in for an order or a contract between the buyer and the seller, the exporter should ensure that the buyer is a trustworthy buyer, an established buyer. Two important things to be seen. Maybe somebody who has started the business today and you are not able to lay their hands, having a permanent establishment, having a website, having their account maintained with some time could put you in risk. So the due diligence on the buyer should be done by the exporter, maybe independently through the chamber or associations, and also by getting a credit report from either through the bank or through the agencies like Dun & Bradstreet, Mira Inform, etc. You can also go to ECGC with the details of the buyer, and when you commit to them that you will be taking a policy from them, they will share the credit report of that buyer with you, informing that whether that buyer is in that database, whether he is buying goods from India for a longer time or not, and other details. Somebody has asked, is irrevocable LC same as side credit? No. LC irrevocable means that it cannot be called back. It cannot be cancelled in between. So revocable and irrevocable is one set of words, where a revocable LC can be cancelled in between, irrevocable cannot be cancelled. Side credit is where the payment is to be made immediately upon submission of documents. The term other than side is usance, where the payment is made after a certain number of days. One more question is there. When it talked of paperless and in this era of high digitalization, how do the bank ensure for the originality of the documents? These days, multiple documents editing tools are available to modify change. I think this relates to what Bhavin sir presented on the digitization of documents. Now, most of the business is being done online, and the documents are being sent directly by the exporter to the buyer. So when the original documents are sent originally by the exporter to the buyer, it is only the copies which are required to be submitted to the bank. Wherever original documents are required to be submitted, they cannot be transmitted originally until and unless there is an arrangement or there is a different mechanism which is to be used by them. So only when you are required to submit the request letter, which is maybe where the original is not there, then you have, if there is a bill for collection, the original documents are required to be submitted to the bank. If it's a bill under LC, then even if you punch the documents in the system, the original is required to be given. So this is, I think, what the bank covered.
Another question is also there, no?
Yes, sir. I just going through one of the more questions.
Please.
Are there any shipment tracking features in case of import of goods through ship or airways? There are systems, sir. There are systems. There is an ICC product where you have to pay and track the bill of lading, movement of goods, etc. That is all possible, I think. Can you explain the flow chart once again? It will again take 1 hour, sir. You may just drop me a WhatsApp or a mail. I will try to explain to you or engage with you. SBLC. So flow chart is what? LC application is made by the buyer to his bank. The bank issues the LC. This LC comes to the beneficiary or the exporter through the advising bank. The exporter makes the shipment. Once he makes the shipment, he will submit the documents to his bank. The document will move to the LC opening bank. The money comes back and the documents are released to the buyer against payment. SBLC, how will an Indian bank issue SBLC against security for funding by some domestic or international institutional financier? Lot of new scams we hear. SBLC is just a guarantee. Banks in India are not allowed to issue guarantee for raising finance. So maybe when we say that raising finance is what ECB, banks in India are not allowed to issue such LCs. It can be for a trade transaction, which you should talk to your bank and find out how this transaction can be structured. So this is all, sir. All questions done.
Thank you, Mr. Gaurang, sir. I think you explained nicely. So we are thankful to Mr. Gaurang and Mr. Joshi, sir, for supporting us to hold such a webinar given every month for that. And topic selected by the ICSA and by the Surgeon India is very nicely covered. So I think it is beneficial for all the participants. My request to all the participants will be there that you send your request and avail the services of the ICICI Bank. And the lastly, I'm thankful to my team, office again team, that is Mr. Rajan, Mr. Ankit, Lokesh, and Vishwas, who is our architect of this program, and Mr. Devesh and Ayush, we are not visible on the screen. Later, they are main architect who are helping me all the way, and to have this people participation should be there. I think we have a registration more than 400, which I told you. Beside the YouTube, other things we are listening to it. I think today webinar must be very good webinar. We must appreciate the ICICI Bank and Gaurang sir, who is nicely presented his thought about the letter of credit. I think this can be beneficial for our listener of this program. Thank you very much. With this, I close the session.
Thank you very much. Thank you. Thank you all. Thank you.
Thank you.
Thank you, Gupta sir, for leading
Thank you, sir.
another good webinar. And thanks to Bhavesh Joshi sir and Gaurang sir for sharing their valuable inputs. Stay in touch with and request to the participants to stay in touch with the AFI for many more knowledge sharing webinars. Thanks a lot.
Okay, thank you very much.
Thank you, sir. Thank you.
Thank you.